Welcome back to theCUBE. I'm Gemma Allen here at the New York Stock Exchange. This is our Crypto Trailblazers series, and today we're marking 10 years of Ethereum. Right now, there's a lot of talk about AI and how to make AI more human. There's not a whole lot of talk, though, about how to make data more honest. Joining me today is Nik Kunkel, CEO of Chronicle Labs, who's going to talk to us a little bit about what you do. Welcome, Nicholas.
Amazing. Thank you for having me.
So tell me, Web 2 was about clicks, connection, activity. Web 3 is a little bit more about receipts, right? Mm-hmm. Break that down for me. Tell me a little bit about what you guys do 4 years in and how you're thinking about this moment right now from an opportunity perspective, especially as crypto seems to be the word on everyone's lips.
Absolutely. So I think what's really kind of come to the forefront in the past few years is that blockchains, while they can serve a variety of purposes, are particularly suited to evolving the traditional financial system. To that end, right, I think we've had comments from, for example, Larry Fink, who very famously said recently, right, we're going to tokenize all of the financial assets in the world. Right? All financial assets will be tokenized. Right, and I think it's interesting, right, to dig into why that is, but from the point of view of Chronicle, right, we are kind of here to help catalyze that transformation.
And you mentioned Larry Fink, and we've seen a lot of headlines, a lot of very high impact headlines around what is happening in terms of DeFi and TradFi and how the old world is meeting the new, right? Mm-hmm. You mentioned when we were chatting just now before we came on air that there's a lot of activity, a lot of community, a lot of conflict, and I guess a little bit of chaos behind some of those headlines. You're running an infrastructure layer essentially. Mm-hmm. Break it down for us. Tell us, what is it like to sell into this space?
Oh, I mean, as we kind of were talking about earlier, right? It really takes a village to tokenize something. Typically, you have an asset manager, you have a fund administrator, you have some kind of tokenization agent, you have an oracle, you will have a chain, you will have maybe a market maker, maybe a vault manager or risk curator, right? So there is a huge number of parties, right, that have to come together, to be able to successfully tokenize something. So it's really a Herculean effort, right? And I think the industry is kind of doing a crawl, walk, run type of approach where the first few instances were really a monster effort by everyone kind of figuring out, what they needed to do, what kind of players or stakeholders, right, needed to be involved. But over the last 6 to 12 months, this has been evolving rapidly. And I think now we're seeing that consolidation, we're seeing those initial kind of upfront costs really paying off and being able to scale this extremely quickly.
So when you say crawl, walk, run, one part of this space that feels like it's taking off at the speed of sound is AI. Mm-hmm. And it seems as though there is a huge opportunity in what you do as the worlds of AI and crypto collide and converge. Tell me a little bit about that, about, the speed at which things are happening, the challenge around authenticity, what's real, what's fake, mm-hmm. and what it means for clients and customers of yours and real life, everyday use cases.
The way I like to think about AI and how it interacts with different kind of pieces is think about what the internet brought us. The internet was the communication of data, right, and the distribution of data. With crypto, kind of the bolt-on kind of attribute that was added here was, okay, now we're not just exchanging data, right? We're exchanging value. What I think AI kind of brings to the table here is the the automation of this distribution of data, the automation of the distribution of value, right? So when we talk about the velocity of money or the velocity of financial assets, I think through kind of AI agents, that is just going to increase exponentially, almost in a kind of pseudo Moore's law type of way.
And what you're doing is essentially time stamping, right? It's creating a moment in time at which truth was truth.
Mm-hmm.
Tell me a little bit about how the technology works from an execution perspective. Is this, a layer that adds, that fits on top an infrastructure layer of, what is already, I guess, quite a complex,
Mm-hmm.
technical ecosystem? How does the product actually fit within the Venn diagram, of, let's say, the world of financial markets, for example?
Mm-hmm. Absolutely. So I think it makes sense here to highlight the problem that we're trying to solve. Anyone can tokenize something, but tokenized assets have one key difference from native crypto assets like Bitcoin or like Ethereum. And it's that they're just this kind of empty wrapper, right? They're this empty shell. A token is just an abstraction. And so the problem that you run into here is when you are interacting with an asset that is tokenized, you have no visibility into what is this thing? Is it actually backed? Backed by what? Backed by whom? How do I know? And this is kind of the problem that Chronicle is solving. We are this real-time automated data infrastructure that is bringing all of this metadata, all of this context surrounding this tokenized asset on chain. And what this enables is it solves this this problem that tokenized assets had where if you tokenize something, right, the idea is, well, we're going to have more distribution for this financial instrument, or we're going to have more utility. But without any of this metadata, without any of this contextual data, these tokenized assets can't be integrated into the on-chain finance ecosystem, right? Only through this contextual real-time metadata can you create these automated risk management systems. I think it might be helpful to walk through like a few examples, right?
Please do, I'd love to hear it.
So we touched on, for example, how AI is going to increase kind of the velocity of money and increase like the velocity of financial assets. I think you could have a on-chain strategy, right? That is like looking for the best yield opportunities, right? It's a yield optimizing strategy. Well, this vault could have a list of kind of approved financial assets, tokenized financial assets that it can invest in. And through Chronicle's data infrastructure that is in real time kind of reporting this yield for every tokenized asset, this yield optimization strategy is just allocating 100 million here. Oh, okay, the yield dropped and yield went up over here. Okay, we're gonna reallocate 200 million of credit from this position into this other position, right? So it's just really this automation, right, and this ability to earn more yield or to reduce risk or to more responsibly manage credit risk, right? That is the real unlock here.
And I think one of the reasons that people play with risk is because of speed, right? Those two things have somewhat of a clash of circumstance at times. And right now in the world of AI, it seems as though speed is front of mind and everyone's top priority. Security and authenticity and all of those things that are so important in the world of the web tend to be somewhat of a reactive layer.
Yep.
How do you think about that? Do you think about is there, I guess, a trade-off, in implementing technologies like this does it in some way slow down or in any way impact the speed of which market activity happens, or use cases across the board? How do you answer that?
I think speed is an interesting question. There seems to be this bifurcation of speed in finance. On the one hand, we have, there's these algorithms that are trading, on the order of milliseconds. On the other hand, we have funds that are, end of day posting, their kind of fund accounting, once per day, right? And that is that is kind of this duality of speed, right? On the one hand, some things are very, very fast and some things are very, very slow. I think when we talk about data, faster is always better. You can build risk management systems that can react to shocks in the market and implement circuit breakers, right? This particular financial asset is more risky, or the reserves have, maybe some questions, right? Or there is a maturity kind of mismatch, right? You can have on-chain systems that immediately recognize this, right? And maybe cut the amount of leverage that they extend, or maybe they would like to unwind some of their position, or maybe they just say, okay, no new positions can be created, right? That would increase kind of exposure to a particular financial asset, right? So, right, when we're talking about speed, right, data needs to be on the order of milliseconds, right? And that's only going to help make these assets safer and make these on-chain credit systems much more reliable and trustworthy.
So we're here today, 10 years of Ethereum. It's an industry and a space that's had a lot of swings when it comes to narrative, hype. I think right now we're in that boom period again in the crypto space. You mentioned, and we were chatting offline a few minutes ago, that when it comes to the collegiality of the industry, you guys think of yourselves as Switzerland. You're everybody's friend, Ethereum, and all its competitors. But talk to me a little bit about the industry broadly, how you think about the time that we're in right now, especially when things are moving at, like I said, at phenomenal speed, where you see the kind of key opportunities for Chronicle, what sorts of industries you see, I guess, also that could be alternative, outside of the box use cases. I'm sure there must be so many for a company like this. Tell me what excites you.
Well, I think it's just the scale at which tokenization is growing, right? You have to remember 18 months ago, there were 0 tokenized assets, right? Let me put out some numbers, right? The entire size of DeFi right now, less stablecoins, is around 150 billion. If we look at stablecoins themselves, right, total supply maybe 450 billion. Let's call it 500.
Wow.
We're expected to have $2 trillion of tokenized assets by 2030. Just the tokenized asset market alone is going to eclipse the size of DeFi in relatively short order. And when we talk about what is the value of all financial assets out there, I mean, if we're excluding things like real estate, if we're just talking about financial assets, there's maybe 300 to 400 trillion of financial assets out there, right? So the opportunity here really is endless, right? And this is kind of where we're seeing the most growth. DeFi growth, while DeFi has been an incredible unlock, has been relatively stagnant for the past few years. And that is primarily because what is used as kind of collateral in DeFi has been Bitcoin, has been Ethereum. And so it's not very interesting when Bitcoin does a 2x or Ethereum does a 2x, because it actually is pretty constrictive on how big DeFi can grow. It's really this promise of the injection of tokenized assets that are going to be the big growth unlock for DeFi. And that's kind of why this is so exciting, I think, for everyone, but especially for our business, and why we're kind of leaning into this approach.
And I guess also the original principle or guiding principle, I guess, of this industry, which was around democratizing access to finance, right? A world where everyone can take part.
Yep.
And it does seem as though as we move closer and closer to Web3 and Wall Street, and these worlds are becoming friendlier and more interconnected, who are the winners and losers in that game? Does that mean that the gamers, the artists, the folks who really had an opportunity to be part of a bigger picture of finance are somewhat losing out to institutional investors? How do you think about that? Do you think that we can continue with this something for everyone philosophy in the world of TradFi meets DeFi?
Well, I think it's all about accessibility, right? Institutions joining crypto is nothing to be fearful of. It's actually points to the success of crypto and being able to show, right, that it is a stable, neutral platform, right, where institutions don't have to be afraid of it as some kind of shadow system or some kind of competitive system, right? It is a way for them to complement their existing businesses, right? I don't think there's necessarily a conflict of interest here. I think if you think about asset managers, right, they just want to broaden access to financial products, right? It's more profitable for them. And from a retail consumer point of view, right, having greater access to get exposure to the products you want to get exposure to, right, it's a win-win for everybody.
And tell me about the technical aspect of this in terms of what you're building, because when I read about this company, I thought, wow, this could be great for writers, for creatives, for, those who are really concerned about how AI is parsing their work and, regurgitating it to LLMs and other means, right? This is an opportunity to timestamp and even copyright what's yours.
Absolutely.
So tell me how that technology will evolve and how AI, I guess, will merge these two worlds. Do you see use cases where this could be a form or version of futuristic copyright systems?
Absolutely, right? So from a creative point of view, anything you publish on chain is permanently recorded, right? So, we sometimes think of, we filed a trademark on a particular date, or we copyrighted something on a particular date, right? I think a blockchain kind of supersedes all of those, right? You have a cryptographic proof, right, that I am the originator of this, I am the owner of this, right? And it's all time-stamped. I think what we have to be careful of is just because the underlying chain infrastructure is this neutral, decentralized, permissionless infrastructure, the things that we build on top of it don't necessarily have those same guarantees, right? And so if we value those properties, we have to imbue these secondary services and products that we build on top of these chains, right, with these same kind of immutable, permissionless properties. And if we do that, then I think it's a really big unlock, not just for finance, but as you mentioned, also the creatives.
Well, as someone who's a lifelong optimist and a creative and hopes to continue to be able to feed my children 10 years from now, I certainly hope so too. So before we go, tell me, what's ahead for the company? More offsites to Dublin, Ireland, I hope. What do you see for the next 12 months? What are you guys working towards?
At the moment, we're just trying to be the dominant kind of Oracle partner in this tokenized asset vertical. I'm enormously proud of what the team has been able to achieve. I mean, we launched this product earlier this year, and in less than 10 months, we've scaled it from 0 to almost 6 billion in tokenized assets, which is the largest player by far. So we're really looking forward to snowballing that momentum, to continuing to retain that market share position, and really benefiting from the growth in this vertical.
Well, we'll be watching closely from the sidelines and wish you all the best. Nicholas, thanks so much for coming on theCUBE.
Thank you so much.
I'm Gemma Allen here at the New York Stock Exchange. This is our Crypto Trailblazer series. Today we're marking 10 years of Ethereum. Thanks for watching.